Thailand, I think, is going to struggle a bit because the tourism is not back to the previous highs and valuation for the market is not cheap. So when I look at the earnings picture of the market as well, it doesn't look that interesting compared to the rest of the region. The Asian markets broadly expected to deliver mid to high teens sort of earnings growth next year. And if I look at Thailand, it doesn't stand a chance. So that's why I think Thailand is going to struggle compared to the rest of the Asia.
And then what about down the road in Malaysia then, Suresh? Because, we have seen the ringgit sort of outperforming as far as Asian currencies are concerned. We've had this fascinating conversation that JP had with the Prime Minister over there about how we've seen other economies doubling down as far as tech is concerned, some of the geopolitics, and how they're sort of balancing, all of these sort of tensions playing out, as far as the business landscape is concerned.
So Malaysian equities and ringgit have done extremely well. We have not seen this kind of performance going back to 10 years. Ringgit is up 8 to 10% in the last couple of months. From these levels, we don't see much upside because end of the day, interest rates in Malaysia are lower than US. I think at some point of time, that's going to bite. And the oil prices are also not going up. WTI is around $70. And so that's not going to benefit ringgit as well. So from an economic or equity market perspective, we don't see a lot of upside from current levels. If we had $100, we will put money more into Taiwan, Korea, and short-term in China, but not into these markets. Within ASEAN, I think Indonesia looks much better compared to Malaysia.
Okay.
As we've covered a lot of ground, Suresh, talking about many countries, what would be your top investment idea?
So within the Asian markets, we are focusing on number one, within China, China tech. I think in short term, that's a trade to be. Then we are looking at the semiconductor space in Taiwan and Korea, specifically Taiwan, because the structural story remains very strong. So we see further upside in that space. From a currency perspective, we still expect CNY to depreciate, despite the fact that we expect US dollar to weaken, simply because the interest rate differential is not in favor of CNY. And from a fixed income perspective within Asia, investment grade bonds still make a lot of sense. You can get 5% plus yield on IG bonds when the Fed is cutting rates, and that's a very good investment.